Today is 26th of April 2023. This is Alpha Dominion Forex Trader. What we do here is to teach you the simple steps that you will take in making Forex a profitable trading. Forex is profitable if only you follow some very simple strategy. Today, we'll be looking at pound JPY. This is pound JPY. This is 26th of April. But before we talk about the live trading, I want us to go look at what happened in the previous months. I want to review the month of February. This is 1st of February. Let's review the month of February. This is 1st of February to 28th of February. What really happened between the month of February and 28th of February? So we'll be looking at February 2023. This is the market. This is what happened. I am on a this is let me go to 1 hour. This is what happened in 1 hour in February. This is the lowest the candle came in February, and this is the highest it went in February. This is a 1 hour chart, but I'll be reviewing February with a 15 minutes chart. I'll be reviewing February with a 15 minutes chart. So I'll put it on 15 minutes. I decide to reduce the candle so that we'll be able to see the effect, how it moves. So we'll look at what happened in February. We've looked at what happened in March, how much we made in March, and we are now in April. So by the time we review February, we can come to April and look at what happened. In trading, once you have an opportunity of making $1, $2, $2, $3, $4, $5, as the case may be, look for that same pattern 100 or 200 times, because it keeps repeating itself, and put a trade following the same process. You keep making money. If you make $10 using a particular strategy, then you also look at that strategy in different format that will give you that same 10 naira. So if you make $10 using a particular strategy, if you do that 100 times, that is giving you $1,000. It's as simple as that. So today we are looking at this market. This is the bigger version. This is the 1st of February. Today's training is essentially teaching you on what to do, on how to take some trades in the market. So this is the 1st of February. When you look at this 1st of February, when you reduce it, when you zoom it in, when you zoom it out, it becomes very little, very minimal. So we'll be able to scroll the space. So before I proceed further, I use Bollinger Band. I'm going to put Bollinger Band 50. This is my Bollinger Band 50. This is the level, the visual, the period. The division is 2. You just apply. It's as simple as that. Level, visual, the parameters. Then I click. So this is what you have. I can also increase this. I can increase this a little for you to see how it looks like. This is my Bollinger Band 50. Bollinger Band, like I said before, has 3 lines: the upper line, the middle line, and the lower line. One thing that is good about Bollinger Band is that it keeps the prices, it keeps the market intact on the lines where the Bollinger Bands are moving. And once the market turns, Bollinger Bands turns, and also tells you that this market is turning. So we are going to look at not only Bollinger Band today, I'm going to add Bollinger Band and Ichimoku. Ichimoku can give you signal that is so key that when you are looking at it, you will not be afraid, because you are not the one that generated the signal. You look at it and say, okay, let me follow the signal and take a trade. I want you to try it on demo, then you go on live, because it's going to give you some profitable trading. What I will need you to do for us while we are teaching you how to trade Forex is to subscribe to us. Refer us to other people that you can learn how to trade by following these simple steps in Forex trading. Following simple steps in Forex trading. So this is 1st of March 2023. Now I've added a Bollinger Band, which gives you the upper and the middle lines. And I told you before, once the price breaks the middle, then you are preparing to buy. But now you need a second confirmation. I'm adding the confirmation for you today to look at, that the moment you also see this, it gives you an opportunity that yes, it has broken the middle and you are seeing a certain thing. And what is that? It's Bollinger Band. It's Ichimoku. Ichimoku Kinko. But we just call it Ichimoku Cloud. Ichimoku itself has, the parameter is 92652. I'm not changing anything in these parameters. I go to the colors. Tekansen. I go to Tekansen is none. I don't need Tekansen's color. I don't need Kujisen color, none. I don't need Chikospan color, none. I need the up Kumo. So I'll be using the up Kumo and the down Kumo. I need the up Kumo, which is green. Then I need the down Kumo, which is red. Here, I make them maximum. The two of them, I give them maximum outline, so that it will be thick, so that you can see it easily. So when I add Ichimoku to this trade, this is what you see. You see red, you see green. You see red, you see green. So for a beginner who wants to learn how to trade Forex, this is the 1st of February. And the 1st of February, the market is already here, coming down. And when you look at this position, you discover that you are seeing red descending. You are seeing red descending. And the same, the price also break the median of 50. And when this happens, and you are seeing red, so you are to take your shot. You are to take a sell from here. Hypothetically, we will be looking at using $1,000, having $1,000 in an account. Then we are going to follow this procedure, hypothetical, in the past. we are going to follow this procedure that assuming this is where we need this market, this is what we are going to do. So if this is on the first and I'm looking at this trade, I am seeing red is descending. Red means sales. The moment you see red, it's a confirmation for sell. So I'm already seeing red here, it's giving me a confirmation. And I'm seeing the Bollinger Band. Bollinger Band is giving me the size 1, 2, 3. There's a contraction there and it breaks it down, then there's a red. So here is good for sell. This is Bollinger Band. Okay, let me change this color to, okay, good. This is a Bollinger, this is a contraction, and this is also a contraction here. This is all we need here. Once this two replicate itself, and this is the middle Bollinger Band, once this price breaks this median down, once the price breaks here, you put your sell here. But before you do that, always check the Chimoku. The Chimoku on your right is showing green up here and it's showing red, and this is descending and the market has broken here. So when you put your sell here, so you are going to take this trade. You are taking this trade and you put a stop loss. My stop loss here is 32 pips, 33. I don't want my stop loss to get to 10. My stop loss should be 30, maximum 30. Okay? So my stop loss here is 27. For every trade I'm going to put, I just to ensure that my stop losses should not be more than 30. That is what I am preparing to lose. To gain what? How many pips here? This is 258 pips. But in actual fact, it's 2,555. But we'll remove the last figure and call it 255 pips. So if you're a forex trader, you know what I'm talking about. So 2555 in an account of $1,000, we are going to follow it meticulously. We assume that we are not in a hurry. We just want to make money in the market. An account of $1,000 will be trading with 0.25, 1, just 0.25. So 2555 times 0.25. This gives us $638. We remove just 75%. This is 75%. By the time you remove the spread of the pound JPY, the broker's commission, this is what you have, 479. So right now, on our first trade, on the 1st of February to the 3rd of February, we're able to make 479. 479. Okay. So we now have 1,479. Then on the 3rd of February, there's also a contraction. You see, of the Ichimoku. And the price, the market price, is breaking the middle. Then look at this, is key. Here is very key. Then then we are seeing green. You'll be seeing green here. This green tells you that you can buy this market, that this pound JPY is for buy, and that is the essence of Ichimoku. The essence of Ichimoku is to tell you this is green, that you are going to buy. So we are through with the red. So the moment it breaks here, you put your buy here. It breaks here, put your buy here. It has been confirmed with this green. You put your buy here, then we are taking a long. It's either you take a long or you take a short. We take a long, and by the time we take a long from here, we put our stop loss. My stop loss should not be more than 30. So my stop loss will be somewhere here. So I'm ready to lose this to gain how many pips? 2732. For how many days? On the 3rd. Then throughout the weekend, I will not encourage you to take your trade above on the 3rd. So once it is Friday, this is what the market is going to give to us on Friday, which is on the 3rd. Then we close the market. We are going to close the market here because this is Friday. So it has given us today 1612. So we come here again, 1612 times 0.25 is giving us 403. Then we remove I'm telling you this is hypothetical. This is 302. So we are adding 302 to 404 plus 479 plus 479. So we have now 1,781. 781. Then on Monday, we would have resumed on Monday. On Monday, on the 5th, the market jumped up. So we would have made the market here. Remember, this is hypothetical. So by the time you get to the office, this is where you meet the market. Then we buy from here because the market is still green. We take our buy here, 1142. So they give us 1142 times 0.25. It gives you 28,285. Then we remove the spread and the commission. So what we have is 214. 214 plus 781. So we have 995. 995. That is a good one. Then on the 7th, there's also a contraction. Mark what I'm doing. You see the Bollinger Band contracted here. The Bollinger Band contracted here. The upper Bollinger Band contracted there. The lower Bollinger Band contracted here. Then it breaks the median. Number 1, it breaks. Number 2, it breaks the median. Then you are seeing red. Red is a confirmation that this market is a sell. Red is a confirmation that this market is a sell. Red is a confirmation that this market is a sell. So we take our trade from here down. We are now on the 7th. So this is going to give us 1976. 1976 pips. Then I put my stop loss here. My stop loss here will just be 19. Okay, so I come back here, 19. I now have 995. 1976 times 0.25. This is 494. I remove the broker's money. Remember, what I'm doing is hypothetical, is to train you. Put this on your system and watch it closely and take your trade. What I'm using here is Bollinger Band, Ichimoku, and the area where you are to take your buy, your short, and your sell, using the Ichimoku and Bollinger Band as your confirmation. So plus 995, it gives you 1,362. So we have 1,365 now. So the total is now 2,000. And again, the Ichimoku is showing us green. And again, there's a contraction. So there's a continuous contraction. See, the Bollinger Band came down and bent here. And then the Bollinger Band also came down from outside and also, contracted. Then it breaks the median. These are the features you are looking for. Then it breaks here. This breaking is key. This breaking is key. Once it breaks here and close above it, and you are seeing green, then you must take a long. You take a buy. Take a buy. Don't be afraid. You are not the one that shows the green. You take a buy. Then you are going to be in the market on the 8th, on the 9th, on the 9th, on the 9th, till on the 10th. Wow. So you take this trade again, like this. This is 1734. 1734. So we have 1734. We now have 2000. 1734. 1734 times 0.25 in two places, times 2 times 0.75. You have 650 plus 1,365. We now have 2015. $2,015. On the 9th, on the 10th, from on the 1st to the 10th, we've got it 2,000. That means we've tripled the $1,000. We're already a profit of $2,000. That is great. You don't need to trade every day. This must be as a result of news. On the 10th, immediately you take this money, you could see it breaks down, it breaks the middle, with such a long candle down. So when you miss this, don't be despair. It has broken this, it's showing you red. But if you are fortunate to see the market come back here, you can take a sell. Let's assume we didn't do anything. We just took our money on the 10th, then we waited for our market to give us the direction. Bollinger Band will always give you a direction. So you wait for this direction. Say it's telling you it curves here once again, curves down once again, it breaks the median. Then you are seeing green. This green is key. This green is key. This green is key. Once you have this green, it tells you should buy. Don't be afraid until you see red before you leave, but don't wait for that. Just take a green, take this green, and then put a buy. So we're going to put a buy here. So we put a buy on the 10th. We also have weekend again. Okay, on the 13th. So we'll take a buy on the 13th because there is weekend on the 11th, on the 12th. So we'll take a buy on the 13th, and this is where we are. So this is 2720. 2720. 2720 pips times 0.25 we're going to use 3 now, times 3, because that is 1150. Then so we have 1133. 1133 plus our 2015 dollars. So we are now having 3,151. This is hypothetical, teaching you how to make money in trading Forex. This is the simplest way you can understand how to trade Forex following this simple strategy. All you need to do is to refer us to your friends, let them subscribe to us, make a comment on what they will want us to do. This is entirely free. We are teaching you free, making money free in Forex trading. So we're back again on the 14th. On the 14th, you've seen another contraction. You see another contraction of the Bollinger Band. Then there's a break at the middle. Then you are seeing green. Don't despise this green at any point in time. And remember, for every trade you take, you must put your stop loss. So I'm taking this trade here now. Then my stop loss must be, okay, my stop loss is 23 here. Okay, 30. Yeah, my stop maximum 30. It's okay. I'm doing that to make 1553. So I made 1553. Very simple method. When I see green, I activate 1553. So I have 15 here, 53 times 25. You know I'm now 4,000. So times 4. No, 1553 times 0.25, which is the lot, times 4, because every 1,000 is 25, times 75. So that gives me 1,116 plus 3,151. So what I have now in my equity is 4,315. My profit is 4,315 plus my capital is 5,000. Plus my capital is 5,000. Yeah. Plus my capital is 5,000. So with 5,000, I will now be trading 0.25 in 5 places. So I'm looking for where I can see red. Yeah, so there's a breakage here. Like I said, you don't trade every day. Yeah. Maybe before we could say Jack Robinson, this happens. So we leave this and come here. This market is not clear. So we are seeing red here and it breaks here. So we come here. This is the Bollinger Band. You can cite a contraction here. Then this is the median. This red is encouraging us to take a shot. So we take a shot, we can take a shot from here and give us, then you put your stop loss. This gives us 880 pips, or we'll call it 88 pips. 880, 880 is 88 pips, or 880 times 0.25 times 0.25, it gives you 220. You know we have 4,000 now, that is 5 times 5, that's 1,001. Let's remove the spread and the commission. 825. 825 plus 4,000, 315. We are now in 5,140. 5,140. Then on the 17th, we are seeing green here, beautiful, and it's broken the middle. So we'll come here again, we'll look at this median, it has broken the median, and there's a green here. We are taking a short, we are taking a long. We're taking a long. This is a long one. We're taking a long, okay? We take this long, and then you put your stop loss below. Then this is 940. 940. 940 times 0.25 equal to 235. We are now at 5,000. Remember, it's 6. We're now at 6,000 balance and 6,000 equity. So we're going to take 6.25. 0.25 in 6 places times 6. It gives us 1,004. Then to remove the commission and the spread, we have $1,057 plus 5,140. So we now have 6,197. 6,197. On the 20th, the market is not clear. There's a small red here. On the 21st, yes, there is green and there's a contraction. So we are going to take a long here. We're going to take a long here. We're going to take a long here. Then we'll take a long here. And it's giving us this. And this is 22.15. 22.15. 22.15. 22.15 times 0.25 equals to 555. This is 5,000. Then we now times by 6. It gives us that. Then we remove our commission and spread. So we have 2,491 plus our current balance, which is 5,140. 140. That gives us 7,000. We are now in 7,631. We've been able to move $1,000 account to how much? 7,000 within a month. So look at the contraction again. This is exactly what you'll be looking out for. You look at this contraction again. You look at the contraction here again. That it breaks the median. The confirmation is that we are seeing red. This is the confirmation, Ichimoku, giving you red, telling you this is sell. That this is sell. So we are taking a short here. We can take from here, really. You know, so this is where the market comes. This one give you 2301. 2301. 2301. 2301 pips times 0.25 equals to 575. You know, we are on 7,000. That is 8 now. Times 8. That is 4,000. Less the spread. That is 3,451. 451 plus 451 plus 7,000, 631. So we're now in 11,000. We've turned 1,000 to 11. Excuse me, to 11,082, and we're on the 20. This is on the 23rd of February. So we also see green here. There's opportunity for us to buy here. So there's an opportunity for us to buy here. There's an opportunity for us to buy here. Then it breaks the median. Then there's green. Once you see green, you're not waiting for anybody. Take a trade. This is where you are. You continue to see green. This is where you are coming. Oh, this is great. Till on the 24th, till on the 28th. So what we have here is 3664. 3664. 3664. 3664 times 0.25 times this 11. Now we are going to do 12 times 12. 36, 35, 36, 35 times 0.25 times 12 less 0.75. We're talking about the spread. So we have 8,000 plus 11,812 plus 11,812. So the month of February, we're able to make 19,990. 19, that is humongous. Following a simple system, 19,990, 75 cents. 19,990, 75 cents. $1,000. This is huge. In Nigerian money, if 19,930 times 750, which is to a dollar, we are talking about 14 million. Huge. 14 million. This is huge. So this is what you do. You can reduce it. Let's reduce it and see what we did here. Beautiful. This is the month of February. We sell here, we buy. We sell here, we buy. We didn't do anything here, but we buy here. We buy here this weekend, we buy here. We sell, we buy, we buy. You know, we sold. We sold there and we bought here. So this is what we did in the month of February, giving us, we turned $1,000 to 19,990. This is humongous. We are Alpha Dominion Forex traders. Subscribe to us. We'll continue to give you strategy that will enable you go into the market and make some money for yourself. Try this Ichimoku and let me know what you think. It's very key because it gives you the signal to take a shot or to take a buy. So this is Alpha Dominion Forex traders, and I said it's a good day.